What is going on, guys? Thank you guys for tuning into another episode. On today's video, I have a great one for you guys, okay? So we're talking about trading psychology. I know you guys really don't get these videos on YouTube that much, and a lot of the videos that you do get, it's kind of difficult to understand. So what I really want to do is I want to break this down for you guys in simplest terms that I can, okay? And I don't want to make this video too long for you guys, but I want to kind of really hone in on psychology behind trading, especially as new traders, because I can understand how difficult it is and how it can really take a toll on your mental, because trading it's a battle between you versus you, okay? And I really want to break this stuff down for you guys in the simplest terms that I can. So with that being said, let's dive straight into it. Your mind will be your greatest friend or your worst enemy when it comes to you trading the markets. What I mean by that, when you're trading, 80% is psychology. We don't really trade the markets. What we trade is our beliefs about the market. Now, I'm gonna give you an example of what that means, all right? So you have three different traders. Traders take three different trades, the same market. Three different traders, they see three different things. Both of those traders are profitable. They have different edges when it comes to trading the market, all right? Their strategies are completely different, but all three of them made money that day. And this is what I mean by we don't really trade the markets. We trade our beliefs about what we think about the market. Now, one of the biggest things that I like to talk about is how you do one thing is how you do everything. This correlates hand in hand when it comes to trading. All right. Are you disciplined? Are you consistent? How are you as a individual when it comes to, for example, when you're driving? Are you a calm person? Are you a very emotional person? Are you very impatient? How you act in the real world will correlate to how you trade. How disciplined are you? Are you disciplined when it comes to going to the gym every single day? This can correlate to you not being disciplined when it comes to trading the markets. You say that you're only gonna take one trade. Now, I'll give you an example of myself, all right? This is how I used to be. I would always say, I'm only gonna take one trade. My first trade was always profitable. My second trade always ended up in me giving my money back to the market all the time. And just looking back in my journal, that's what it was. It was my first trade was profitable. Second trade, I gave my money back every single time. But I wasn't consistent in the gym. I wasn't disciplined as far as me going to the gym, working out every single day. I wasn't disciplined in my day-to-day life. And I realized that. Now, another example, are you a very impatient person? This leads to impatience in the market. Let's say you see a setup about the approach, right? For example, Tesla's at 300. You don't wait for that 300 break and you enter early. This leads to a dump in the market, and the play automatically just reverses on you and it starts going the other way. Why? Because you were impatient. You did not wait on your setup and the market turned against you. So this is what I mean about how you do one thing is how you do everything. The market will expose all of your flaws. Whether you like it or not, it will expose everything. It is up to you to make the change once everything gets exposed. You have to have the self-awareness to be like, I am a impatient trader. I am not disciplined. I am not consistent. Write this stuff down and look at things that you have to work on. I need to work on my discipline. I need to work on my patience. I need to work on my consistency. Write all those things down, and also write when you're not disciplined, right? In your day-to-day life. Like, let's say, hey, today's Monday, I'm supposed to go to the gym today. All right, today's Monday, I didn't go to the gym today. Or today's Tuesday, I did. Wednesday, I didn't. So how you start to see your patterns throughout the week is how you will see your patterns throughout your trades. Now, we're dealing with money, so the psychology will take a little bit longer when it comes to trading, but it's a skill and you have to build that skill. It's not gonna happen overnight. You can't be a non-disciplined person, non-patient person and all of a sudden think that because you start trading, you're automatically going to become disciplined. No, it doesn't work like that. If you're not disciplined in your day-to-day life, then you're not going to be disciplined when it comes to trading. When you're trading, you are approached with 4 fears. Now, these 4 fears are the fear of losing money, the fear of being wrong, the fear of missing out, and the fear of leaving money on the table. The fear of being wrong and the fear of losing money is probably the main fears that a lot of new traders and seasoned traders kind of deal with. All right. So the fear of losing money, as a new trader, you have to understand that you will lose money in the markets. Okay. It's inevitable. It will happen. Now, how much money you lose, well, that's up to you. But you will lose money when it comes to trading the markets. You cannot come into this and think that it's only win, profits, gains on top of gains. I see it on Instagram. I see it on TikTok. I see it all on social media. These guys are making hundreds and thousands, 100,000, millions of dollars. Yes, it's possible, but it's not possible to make that consistently every single day, day in and day out. It does not work like that. The market just does not work like that. All right. You will lose money, and you have to come with the realization that you will lose money. Being wrong. Yes, we are all wrong at times as traders, and it's okay. A lot of times, even seasoned traders, we become biased to the market. We want to make our own predictions on what we think the market is going to be. We can never predict what we think the market is going to be. Understand that the market is the market, and the market will move how the market wants to move. You do not predict. You can make an assumption on how you think the market will be, but the market is going to do what it's going to do. All right. Many times you might have the proper setup. You might have the proper strategy. Your edge might be approaching in the market, and everything, all your confluences check out. But the market just turns against you, and that is okay. That is a good loss. You have to just be okay with having a good loss. It happens at times, all right? Now, the fear of missing out, understand that as a trader, you don't have to trade every single day. If there's a trade that happens in the market, let's say there's a big move that happens and you missed out, it's okay. There's always the next day. You can always there's always another day in the market. I promise you that. And the market will always provide you with at least 3 great setups in the month. You can guarantee that, all right? So understand, if you do not trade Monday, Tuesday, Wednesday, Thursday, and then you decide that, hey, Friday, my trade is approaching, capitalize on those trades. Never feel that you missed out in the market. The market makes moves every single day. It's your job to capitalize on the moves when you're present in the market. And this is why screen time is important, okay? Constantly looking at the markets, constantly being involved in the markets every single morning. It is important. Don't think that, hey, I'll look at it on Monday and then I'll look at it again maybe next week on Thursday. No, be present in the market every single day. So when you see the perfect setup, you can capitalize on it. After consistent wins, you tend to want to increase in size. Now, an increase in size, it is not given, it is earned. Now, you can't just expect to go in and position yourself to 20, 30, 40, 50, 100 contracts after you've only been trading 2 to 3 to 4 contracts, all right? It doesn't work that way. And let me tell you, this is from experience. I was at a level where I was at 3 to 5, sometimes 7 and 10, right? I went from that to all of a sudden I was doing 50, 70, 100, and 200 in the contracts, all right? This is what happened to me. I've got to a point where I was in my position and I was basically, I was hyperventilating. I was breathing hard. I was sweating. The only thing that I could think of is my play has to go my way. if this doesn't go my way, I am going to be losing a lot of money. And your thought process shouldn't be that when you're in a trade. You should be comfortable when you're in a trade, right? All your confluences should check out, and you should just sit there calmly. You shouldn't be thinking, this play has to go my way. This play has to go my way. If this play does not go my way, I'm going to be losing a lot of money. No thought like that should be running through your head. This is why I say position size, it is earned, it is not given. When you increase your size in a fast amount of time, what starts to happen is everything that you've learned kind of just goes out the window for a minute. And all you want is just a play to go your way, all right? But I will tell you this also, just because you're doing 1 and 2 contracts, do not put everything that you learned to the side either, okay? Because this is what happens also. A lot of times when you start off and you're doing 1 to 2 contracts, what starts to happen is you think that you don't have to follow your strategy, right? For example, let's say you are in a position and you are down by, let's say we're looking at the 300 calls on Tesla, all right? And you already entered a position. You played the break of 300 for Tesla, but now it starts turning against you. And you skip your stop loss, right? You remove your stop loss, and now Tesla's down at 292, all right? And now it's at 290, and now you're down 10 points. You are way past your stop loss. But the reason that you don't feel that it's important to close out your position is because in your head, you're thinking, well, I only have 1 contract. It's not that much money. Maybe the play can turn around on me and it might start going in my favor. I only have 1 contract, so if I do lose, I'm not losing that much money. I'm just crossing my fingers and hoping that this play goes in my direction. That is a wrong mindset to have. Understand that when you do that, even if you have 1 and 2 contracts, when you do that, what starts to happen is when you increase in size, the mentality stays the same, right? So now you have increased to 10, 20, 30 contracts, and you're still doing the same thing. Why? Because you practice bad habits in the beginning. When we are trading the markets, a lot of times we have these action and reactions that spark our brain when we're in a losing position or when we're in a winning position. All right, now I want to talk about these 2 things. So many times when we're in a losing position, we tend to hold our losers a little bit longer than we do our winners. And this is the reason why. So when we're in a losing position, the only thing that we think about is this can turn around. This play can start going in my favor, all right? This play has to go back up because we already fell way too much. So you continue to hold those losers and you just continue to hold them. And before you know it, you have surpassed your stop loss and you are down bad. Now, this is what happens when we're in a winning position. I am in a winning position. Let me close out and take my profits right now. If I don't close out this position, this is going to turn into a losing trade. Let me just close out on all of my positions. All right. This is what runs through our heads when we're in a winning position and when we're in a losing position. One thing that I started doing was I started practicing on pressing on my winning positions and cutting my losses short. I read this book called The Best Losers Win. I really resonated with this book because it is true. The best losers win. When you learn to lose good and cut these losses quick, you don't tend to let your losers continuously run and run and run. You have to make more when you're right than lose when you're wrong. Because what I saw throughout my journal was that my losses were always huge. I had huge losses. And my winners were always, they were decent, but I felt like my losses were always bigger than my wins. Now, when you start to reverse that, that's when you will begin the process of becoming a profitable trader. Cut your losses short. If you are a trader that continues to make the same mistakes over and over, you have to really look at yourself and understand, why do you keep making the same mistakes over and over and over again? Is it over trading? Are you getting in positions too early? You're not using the proper risk management. Are you not using a stop loss? Are you over trading? Are you not having a game plan before market opens? Like, understand, why is it that you're making the same mistakes over and over? All right. As a trader, you have to kind of look at yourself internally and kind of write this stuff down. See what you're doing right and see what you're doing wrong when it comes to trading, and then see what you're doing right and see what you're doing wrong in your day-to-day life. See what you need to improve on. Write all this stuff down. Now, the best thing that I can leave you guys with is this: the best losers will always win the markets. When you become tired of losing, then you will start winning. Thank you guys for watching this video, man. If you guys like this video, if you guys like this type of content, please make sure you guys subscribe to the channel. Make sure you guys like this video, and make sure you guys comment down below on anything that it is that you guys want me to put out there for you guys. All right. So with that being said, man, I will catch you guys on the next video. Peace.